Welcome to today's Silver Log. It is the 13th of January 2011, and we're going to start again with the price memory, developing a heck of a lot of memory towards the $29 level. And today, we've seen the market break down a little bit. Now, what happened earlier this morning was that we had a rally before the United States market opened, which was promptly followed by a decent sized sell off. And that changed my bias for the day to be that of bearish sentiment. And that's pretty much exactly what happened today. Now, what I've added on here is the volume weighted average price for the year. And it works out very well because that's when the market also topped at the $31.28 handle. So within this volume weighted average, yesterday it managed to come up towards it and was not able to break this resistance, and today it has fallen below it. So we'll check later on over the next so many days and weeks to how well this average price is moving towards. We now have this 10-day moving average. It's declining. The 20-day moving average is flat and is most likely also going to start to go down. Now, I said yesterday within this 5-day moving average that you want to come back down to it as support. Therefore, if you were buying silver within the 5-day moving average, well, then that's sometimes why you want to put a stop loss a little bit below the 5-day moving average, maybe below the 38.2% from in here. And even the same thing if you were to buy on a Fibonacci level, say 61.8%, it didn't hold. And oftentimes from failed moves can create fast moves. So the failure for the 5-day moving average to become support or brought us a fast move for the market to keep going lower. And now this means that we are ever so close to this 50-day moving average. We're less than 1% away from it right now, and that is obviously the next target. And I know you've seen it. There's a head and shoulders pattern now. This is the left shoulder, the head, and the right shoulder. So we have it's set to be at the neckline right now. And the neckline for this pattern is pretty much within this area here. I don't know if there's an absolute figure that it's got to be like 2850 or 2840 or whatever. I don't know. But when we take a look at the length within this pattern, the level has a full dollar here, a full dollar here, a partial amount here, and even a partial amount here. So that's about $2.50 of downside just by the length of this pattern. And 2.5 from 28 would get us towards the 26 level or so. And we'll talk more about those expected downside targets as we move on to the daily time frame, and we'll do that daily time frame right now. This is the daily chart, and I have the volume on here. This is volume from SLV, and I'll be changing up these things on the top hand of the screen for a little while. Now, the big volume that we had occurred within the selling when we got up to the 29.33 handle. We have yet to have had volume bigger than this as of now. It's almost guaranteed that sometime soon in the future that this level will be taken down. It would either be for a big move to the downside or a major breakout. It won't be for any just regular type of trading day. Then you had a big amount of volume here and in here. So I really think that the odds do favor that we could see further downside, as we did manage to find resistance at this 3140 area. And that's the big Fibonacci level I've been talking about for what seems to be like 2 years now. And that could give us reason, of course, for the 25-26. And I've been talking about the odds going down there is just pretty decent. I'll get more into that within this broadcast. As far as some trend line analysis is concerned, this trend line has obviously been broken. No denying that, but it still has held this 28 level. So you can say that the neckline for the head and shoulders pattern is like 2850 or 2840 or whatever, but really 28 is a massive, massive level because it was resistance here, support here. So we've had it become resistance on two occasions. We've also had it become support on one. So 28 is that of a decent size level. Now, I can't put the 50-day moving average on these candle charts. I really don't know how, actually. If I could, I would, but I can put some nice little different indicators. And one of the ones that I've been talking about is the direction from the 50-day low. I don't know if many people would be using any type of indicators like this, but as I was saying before, when I had this breakout pattern here, it was showing signs of really giving us reasons for the big up gains. And that's what happened when we had this August rally and the market went higher. Now we've seen how this thing topped here. This really doesn't give you sell signals because if you were to sell at this top in here, that means you'd be selling at around 28 or so. And that, of course, was not the top. And the 50-day low right now is 2470-ish, I think. I can't remember offhand, but tomorrow will be 25, and it will remain 25 for a few days. Therefore, if we can find some sort of buying pattern, any for this chart to reverse, then maybe that can give us direction for another intermediate to long-term entry point. I don't know much if this is the greatest of forecasts because I kind of made this one up myself, but it's what this one is showing. And I got some other ones too. This is the direction from the 50-day moving average. What this means is where price action is from the 50. For example, if a 50-day moving average was at 20 and the market was at 25, that would be 5 points above 20 and thus 25% above it. So what we have seen is since this point in here where we broke out in September, the market has remained above this 50-day moving average, and that's quite strong. But we can also see that this pattern is also in that of a downtrend also. Once again, I don't know how many people would use this, but I'm going to keep an eye on it. It's actually very easy for me to get these charts updated. It just takes a few seconds. Getting it set up was a small amount of time, but it's actually pretty easy now, and I'll be looking at these over the next few days and weeks. And the next one is the rate of ascent and decline for the 50-day moving average. Now, what this one means is it takes the value of the 50-day moving average and how much it gained from yesterday's value. So, for example, if a 50-day moving average was scheduled to be at, say, $25, and then the next day it's at 25.12, that means it went up 12 cents, which is that of a 0.5%. So what this means is that when it's above this line here, it's a rising 50-day moving average. Now, the one big difference that I like about this is you can see when we have this decline that even though the 50-day moving average is rising, it is showing us that the rate of ascent is actually slowing down, which started back up towards these little highs in here. Same thing when it's declining. For example, way back in 09 in February, we can see in here that the 50-day moving average during this period in here was declining, but it wasn't declining as fast as it was before. Now, once again, whether this can be used for a buying opportunity, I'm not too sure, but it's just like the other ones. It's also in a downtrend again also. So now what we'll do is we'll finish this off with some Fibonacci. Now the Fibonacci lows from the breakout on August 24th was 1774. And the highs on January the 3rd was 31.28, just 12 cents short of that key Fibonacci level of 31.40. Now, on an exponential level, I can sincerely tell you I cannot give you a mathematical formula for how to calculate it other than on multiple steps. However, from the exponential levels and the linear levels, what we see here is that we have 2517 for its main one and 2611 in here, which is the area for the bottom of the head and shoulders pattern. And that's why I've been stating that based on the 3140 top, I'm expecting it to go to 2526. This is the reason why, because Fibonacci tells me that it is the reason why that would be its expected target. Now, I think I should point out this one here. Now, what the 76.4% means from this level to this level, 76.4% on the way up also translates to 23.6% on the way down. 61.8% on the way up also translates to 38.2% on the way down. But within these numbers here, we have the levels within 2735 and 2808. And most people would look at this one in here, the linear one, because one, it's extremely easy to calculate, and the software tools that I think a lot of chart programs would use is linear. Now, there was one person who was making charts on YouTube that I seen had a chart program that was exponential, which I thought was extremely cool because I really have never seen them. So I look at linear Fibonacci as in more people see it, and thus it becomes that self-fulfilling prophecy because of that factor. Exponential Fibonacci is more of a natural Fibonacci. Not as many people see it, but it may work within the natural sense of things. So therefore, I would think that there's a decent chance we may get a little bit of a bounce at 28. And if it does bottom at 28 or in the area of 28, this would be extremely, extremely strong, because what this means is any type of retracement downwards to the 25 level is both a bearish and a bullish thing to happen. It is bullish because we have the healthy price correction. We establish a significant low that we can see after the fact. And when that's the case, it can start to have the energy for the higher gains. Now, for it to be bearish, not only would it have to go down to 25, 26, but it would also have to not get back above 28 and 28 and a half-ish or so. And that's why when I see something that's both bullish or bearish for something to happen, I kind of like to play within that side, if you will, because the odds would favor more of a chance within it happening. However, if it does hold around this 28 mark, then what I would be saying, or what people would be saying after the fact, is that it had a nice correction through time within this range. It developed enough energy to make a big move, and because it only corrected through time and really not much through price, that would give us reason for the major gains to happen towards the upside. And this is important to know, because if you see that it does hold and it's trading back above 30, you can say to yourself, okay, wait a second here. This thing looks like it might have enough room to break out to the 35, 36 level. But for now, we'll just leave it at that and wait for what the message of the market happens to tell us. So thank you for watching this video, and have yourself a magnificent day. Bye-bye.